The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, sports fans. This is Larry Pesavento for TFNN, and we're at the half hour. We're going to have Arch Crawford from Crawford's Perspective. The King of Astro is going to be here to give us his thoughts on the market. And but today we're going to start out with looking at the VIX index, because that's been the thing that's been a pretty good indicator of market direction for quite some time now, after we had those triple bottoms that we call the 135 pattern that occurred recently. And now what we're looking at is we had a 50% pullback yesterday, and with the strong day today, it looks like we're getting ready to head up to our Mr. Chapman's, Basil Chapman's target somewhere above 20, I believe, is what he was talking about on his shows just a few days ago. So if that, in fact, does happen, we'll have to wait and see. But it does look like the market is under, some pressure. We just hit some major support in the futures at that 1616 level. That was a very important ABCD pattern that I will post into Tiger TV a little later. But the main one that I wanted to talk about now, because it's the money market. It's the one that is the biggest of them all, and that's the euro versus the U.S. dollar. We're completing a very bearish Gartley pattern here up in this 133.50 level, and it's also making a head and shoulders pattern from the high in September to the high in January to the high where we are now, and that time frame is nearly equal. So this is a symmetrical head and shoulders pattern with the euro in here. So I already am, going short the euro here at this 133.50 level, and risking about 40 pips, no more than that. But it's a perfect pattern. It has so much symmetry. And if you have a chance to look at it, you'll see that over the past year and a half, you'll see that the swings have been very, very predictable. They're either, on the expansion side, they're 1.27 or 1.618. And on the contraction side, they're usually, 618 or 786. Occasionally, you'll see a 50% in there. You'll be able to see that without too much trouble. Tomorrow on the commodity market show, we've got some. We're going to have Rich Anderson on tomorrow. He's trying to work his schedule around, because we've got a setup coming in corn that we've been waiting for a very long time. And it might come to pass, so we have to keep an eye on that. We'll get Rich to tell us, some of the technical factors that he's looking at in corn and soybeans, because that market, even though it's had some really good news, has not responded very well at all. So that's something that we have to pay attention to, but that'll be for tomorrow's show. So we've looked at this euro dollar, and the important thing on the euro, if you look at those into Tiger TV, you'll see those two I guess they're called, I don't know what the color would be. I guess it would be more like a pink than anything else, but they're two colorful dots, one in March and one in May, and that basically tells us that, we're looking at some type of a double bottom. Well, that was the equivalent to the double top that we made in the dollar index at that 84.50 level that we highlighted for more than a week, because it was making such a, incredibly easy double top to hit, and now we're trading below 80 in the dollar index now, so we're getting close, to the objective of that particular double top formation in the dollar, which is the same thing that we're having now in the euro. But the euro is a perfect Gartley. That's an ABCD right at the 61% retracement, and whether it works or not, we don't know. But frankly, you give yourself 100 of these trades, and you're going to win on 70 of them, break even on one or two, and then lose on a few of the others. But that's the bottom line. This is everything that you look for, when you're watching these markets. Now, the next market that I want to talk to you about is the S&P 500 futures, because we've hit some very strong support points down here. Looking at this, I've got to move this to a hourly chart so that we can see it a little better, but we are very close. In fact, we hit the exact 61% retracement today. We've had some very wide-ranging bars coming into it, but it's made a perfect 61% retracement down at the 1616 level, and that's the number that we're looking at. Now, we've had some really strong wide-ranging bars. In other words, long bars where they're tail closing in the end of the move. They look like engulfing lines when you look at them in Japanese candlesticks, and that's what we're having now. So this is not an easy buy down here at the 1616 level. If you buy it there, you don't want to risk more than just 3 points. That would be the most. What I would do is I would wait and see, how it's going to hold at 1616 before I attempt to even buy it. But frankly, folks, this old cowboy is so bearish. I wake up in the morning and I look for a tree that has honey in it. That's how bearish I am. So I don't know, where it's going from here, but I do know if we get below 1595, they're going to turn some lights out somewhere along Wall Street, either on Broad or one of those other streets that's there. It will really be something, on the downside if we get much below the 1595. And if we did it today, if we were to have a really bad day in the market, Dow down a couple hundred, you would be looking at the market breaking out 1595, and that's what Apple did when Apple was after the 700 high had been made, and everybody was bullish. There were no analysts that were bearish on Apple at 700, and the market turned around, had that small 382 retracement, and then just collapsed down to the below $400, and that was when it was trading. I believe at almost 600 is when it did that trade, or when it made that retracement. So we're doing the same thing now, and that's why it's so very, very bearish. Looking at these, because it gives a really negative outlook on stocks, especially the action over the last couple of days from June 6th. We had the rally that stopped exactly at the 61% retracement up there at 1645. High was 1647. And then now we've given back 61% of that in a matter of 2 days. And if we go below it, then you're looking at the proverbial falling safe. So we're watching it quite a bit, because we're trading a little bit below 1616 right now. And, the next objective would be 1606, and anything below 1606, you would be looking at something pretty nasty for the end of the day, and that target would take you down, well below, 1570 in the S&P, if in fact does that. But the market has been acting incredibly bearish since that May 25th low, May 25th area, which was the lunar eclipse and full moon. Now, we have another lunar eclipse. No, that's not true. We have another full moon coming in on the 23rd of June. And this is going to be a very interesting one, because you have the Earth is going to be at zero declination. In other words, it's going to be setting right over the equator. And then you're also going to have the moon is going to be at perigee. In other words, the moon is going to be as close as it gets to the Earth. In other words, when it gets close to the Earth, it's perigee, and then when it goes around 14 days, it moves out to apogee, which means it's the farthest away from the Earth. Well, these are the gravitational forces that cause these earthquakes that we have. And I don't know if there's going to be one happening, but with this type of alignment with the full moon and the moon over the equator, and then also the moon at perigee, when it starts to move away from perigee, we might have a very severe earthquake. I'm not predicting an earthquake, but these have happened before when all these things come together. It's some astrologers refer to it as a super full moon, because it has everything that is there that makes it correct, because all the geometric things are right. When you're looking at a regular full moon, you're just looking at the graphics the fact that the moon is the fullest that it's going to be. But if you have the things that make the gravity move, like apogee and perigee and the declination of the moon, that makes it even more powerful. And that happens on the same day of June 23rd, which will happen to be a Sunday. So we'll know by Monday the 24th if that's going to be significant or not. But that's what I'm seeing right now. In the stock market, it still looks incredibly bearish. We have some really key things happening, not just in the dollar index and the euro, but we've also had some really nice moves in the Treasury bonds based on that big ABCD, which we'll cover. Someone just reminded me that Bradley June 22nd is also a Bradley date, and the reason for that is because of that big lunar effect. The fact the full moons with Bradley did count a great deal, and then there's some other smaller planetary things, that lined it up pretty good, and we'll see. When Arch Crawford comes on at the break, I'm sure he's going to, give us some good information. And also, if you have any questions to ask Arch, you can, give us a call at 877-927-6648, and he will be, more than happy, to answer them for you. So we'll see if you have any questions, be sure that you do that. But this is it's really an interesting situation that we have going in stocks now, because you've got the whole world has really been very, very bullish stocks that we posted these charts many times before, showing that the margin interest is as high as it gets, and some other things that are really, really awesome as far as contrary indicators. The news items in Barron's saying that the bear is dead and stuff like that, and that's what happens when you hit a major top. But folks, I still believe that we're looking at the mother of all tops. And if we go below 1590 within the next day or two in the S&P futures, then I will be expecting it to go far, far lower and very quickly. In other words, I'll expect to see an acceleration. We do switch over tomorrow from the June futures in the S&P over to the September. We're rolling over, and so that will be a little bit of a problem for a day or two, but they're both relatively liquid. So if you're trading on a short-term basis, you can certainly trade on 15 and 30-minute charts with enough nice chart action in September to do that. But if you're rolling over for a longer period, make sure that you watch that the difference between the June and September is just a few points. So that's really, it's usually insignificant for someone with a very large account, but with a smaller account, it means a little more. We'll take a break here, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I posted into Tiger TV the bond chart on a daily basis. And yesterday we completed a big ABCD pattern on the daily basis. You know, we are down near the January lows of 2012, and we should get a rally here. It could be, if the market really weakens at this spot, we could get a very substantial rally. But folks, the bond market is in big trouble. I mean, it's really rolling over badly. The Treasury note market has, gone down to January's lows, and interest rates are going higher, regardless of what the Fed is trying to tell us. They can make the interest rates cheap with the banks. They can give them access to the windows at, a very, very small amount, and of course they make the difference. They borrow money at 1/4 or 0.5%, and they lend it out at anywhere from 7 or 8%, 6%, 5% on cars, and then, all the way out to 19 to 24% on credit cards. And that's why the banks have gotten so fat. They're not too big to fail, that's for sure now, because they got pockets full of cash from the Fed, but that doesn't mean they can't fail down the future, because if they're doing the same things that they did before, letting people, borrow indiscriminately, then they will get us a problem. The other thing is they could be playing games with some of these real estate transactions that they did that they still don't know how to unwind, because when they bundle these mortgages, they don't know where the mortgages are. They're just lost in a quagmire of paperwork. So with the Treasury bonds and also the Treasury notes, we've had a little bit of a bounce in Treasury notes where interest rates have backed off a little bit. And the quality of this rally that we get in both the Treasury bonds and Treasury notes is going to be the key to what we're going to be looking at. If the market only rallies to a 382 retracement in the bonds, they're only going to go from 137 up to about the 142 level. They're going to rally about 5 or 6 points, which is a considerable move in Treasury bonds. It's about $5,000. But if it gets up to that 382 and doesn't hold that level and starts down again, then you're going to see interest rates accelerate really rapidly. People have emailed me and asked me, what is the trigger mechanism that I see to be so very, very bearish? Folks, I have no idea. All I do is I look at these charts, these long-term charts on stocks and bonds, and frankly, these are the most bearish patterns that you can get. I might be wrong, and I'm certainly going to eat some crow if I am wrong, but if I'm right, then we'll have a little surf and turf. But that'll be down the road. We'll see how this happens. Now, the next thing in the bonds that we have to look for, of course, is what I just mentioned, is a 382 retracement that would take us up around 5 to 6 points off of the bottom. And that would be from 137 up to around 142, to 143. Now, if that takes 4 or 5 weeks for that to happen, in other words, you get just a very, very shallow bounce in these bonds, that is going to be telegraphing that we're in an incredibly weak environment. That's really going to be telling us exactly what we're doing. Now, we have a situation in Asia where the Nikkei Dow is down well over 15% from its high now, and that's causing pressure on the dollar yen. And we broke below key support today at 96 in the yen dollar. And what we're looking for on the next move on the yen dollar is down another 2.5 to 3 points down to around the 93 level in the dollar yen, which would be a 382 retracement, of the whole move. Now, the yen and the Nikkei have been almost a 90%. Not almost. They are a 90% correlation. In other words, when the Nikkei goes up, the yen versus the dollar, comes down, and that's just the reverse because the yen used to be at 260, it went to 75, now it's rallying back. So there's been a tremendous correlation. However, this correlation might split here because the Nikkei could continue down because stocks are weaker in in Japan, and yet the currency could actually strengthen versus the dollar. In other words, it could go from this 95 to 93 level all the way up to 125 to 130, and the Nikkei not do very much at all. That's a possibility. I'm just looking at the charts. I don't understand the fundamentals. I don't want to understand the fundamentals because all I'm interested in is that bar chart. If the prices are going up, there's more buying. If prices are going down, there's more selling. That's the basis of what we're looking at. Got to take a break here, folks. When we come back, we'll have Arch Crawford on.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you?
Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, boys and girls, and we have one of our favorite people as a guest today, Arch Crawford of Crawford Perspectives, Tucson, Arizona. Arch, are you there?
I am, indeed. Hi.
How are you, my friend?
Very well, thank you.
Listen, the first question that someone brought to our attention is, what is your feeling in the stock market as we approach the middle of June? What do you see for the summer months?
Well, it looks like we are finally breaking some significant support for the first time, and it's accelerating to the downside even today. So I would say I want to see how far this goes, and then I think there will be another rally into the middle of like July, because there's a grand trine on around the 21st or 22nd of
Could you
July.
tell the folks what a grand trine is, Sam? Or Arch? Arch's nickname is Sam, folks. That's why I've always referred to him, so I'll try to remember. Arch, tell the folks what a grand trine is.
It's 3 planets at equal distances around the sky, looking out from here or looking out from somewhere else. Just that it's 120 degrees from one planet to another, and then a third one, that's a trine, and a grand trine is where a third planet is at another 120 degrees from both of the others, forming a triangle or trine pattern.
Does it make any difference which planets are making these trines, of whether it's bullish or bearish?
Well, a trine is generally considered positive, but if it's all hostile, ugly planets, it could turn into something else. I have seen dips on them, but they're non-standard, or you have to have all of these things backed up by technical analysis as we approach them.
Absolutely. Now, a trine would be more like a triangle then, if you connected all the dots between the planets.
Yes, there'll be three. I think it's Saturn, Neptune are in a trine exact yesterday, and Jupiter will join them, trine one and then the other on the same day, or less than a day apart in July, forming a grand trine with Mars, with Saturn, Neptune, and Jupiter. And
okay, I have a question for myself, and that is, we talk quite a bit, of course, but when we have this full moon that comes up on June 23rd, we're going to have the moon at perigee and also at maximum declination. As I recall, once on the show, you mentioned that these are the things that have a propensity to show earthquakes during that time. Am I correct in that assumption?
Yes. The thing is that they cause high tidal forces. The tighter the alignment between the sun, the earth, and the moon, the higher the tides on the earth. Now, just remember that the tides work in the earth as well as in the water. So you get a high tide in the water, which everybody is familiar with, but you get a high tide flowing around in the earth, and if it hits a sensitive point that's built up some stress, earthquake there.
Tsunami that they had and
predicted it would be on the new moon, and a very good astrologer in Phoenix predicted that it would be on the full, and he was exactly right. I was 2 weeks away, or one syzygy away.
Okay. Now, are there any other really key planetary events that you see happening, say, over the next 2 or 3 weeks that we should watch as a particular date?
Well, there's, I think, positive ones. On the 18th to 20th of June, Sun, Venus, Jupiter triple parallel. It's like a conjunction, but it's conjunction in north-south orientation as opposed to east-west orientation, which what most astrologers look at. But this is a Sun, Venus, Jupiter. They're all positive planets, and they're in the best possible aspect. So I would bet on a rally into that, and I would go short on it because that probably will be right at a high. Yeah.
Sam, the other question that I had, I know you're a avid gold trader, and you've done a great deal of work in gold. What is your feeling on the gold market here from both a technical aspect and a astro aspect?
Well, this Sun, Venus, Jupiter alignment on the, what did I say, the 18th? 18th to 20th will probably be a low in the gold, and you could buy it there. The pattern in the gold, we broke that long-term support level at 1523.90 on the day that Pluto was having its retrograde station, and it went 206 points the next 2 days, that day and the next day, I think it was, into April 16th.
Yeah. And then we have Mercury going retrograde on June 26th. So that could also have an effect on the gold, couldn't it?
Yes, that can have an effect on whatever markets are moving one way or the other. It can reverse, or it can just go dead with the retrograde.
So if it's rallying into the 26th, you'd want to be looking to get out, and if it's coming down into the 26th, you'd want to be looking for a buy.
Yeah, as long as any kind of other technical work confirms, yes. Right now, the pattern is such that we had the retest at a higher low than the washout low, but it couldn't. And then it rallied back up nicely to a good Fibonacci level, I think it was, and then we came back down for the retest, and we have not been able to get back up. We had a rally and then another pullback, so that we are triangulating, with higher lows and lower highs. That can be a dangerous pattern, and it can lead to an equal down leg later, or it could hold here and develop into a pattern and then break out on the upside at some later date. What I don't like is that the HUI, which is the non-hedged gold stock index, has not been able to get above the 50-day moving average. And it's pressing down on it now, so it has got to break down or break up soon, real soon, like I'm within 5 to 7 trading days. It could do it any day.
We've been watching the gold-silver index and also the gold-bug index, and they've had some major support down here at the 786 level. But like you just mentioned, the rally that they've had has been very, very sparse, and partly is due to the fact that there's been a lot of selling in all stocks, across the board. So that's another factor.
Well, here in this market, so I'm keeping my fingers crossed.
Is that a trading strategy that you use, keeping your fingers crossed?
Oh,
I've never heard of that one before.
Uh-huh.
I know we both use worry beads, but I didn't know you used crossed fingers. I'll have to try that.
It's a waste of time. But
hey, Art, thanks a lot. Anything else you'd like to add before we go?
Clear head and a good analysis beats any other kind of superstition.
This is true. Is there anything you'd like to add before we let you go?
The most important thing going on is the interest rate and the bond structure. And I would say that I've been looking for a top in the bonds for a long while, and it was actually July 24th last year, I think it was. And I was looking at the TNX, which is the rate on the 10-year, has formed a rising channel, dipped below it briefly, and is rallied back to briefly above it. But it should hit resistance right here where it's hitting resistance on the rates, and it could pull back a bit with the bonds rallying a bit. But I think the long-term top is in.
I agree with you, Sam. I've been very bearish bonds for quite some time, and we're down near, yesterday we hit near the January lows in both Treasury notes and Treasury bonds, but that's a very oversold condition, so we're expecting to see just a little bit of a rally.
Yes,
and then see what happens from that point. But I agree with you that massive head and shoulders pattern in the bonds is enough to scare anybody.
With any experience in this.
Well, yeah, there's the key, with any experience. Hey, Arch, thanks a lot, buddy, for showing up, and we will try to get you in another couple weeks, okay?
Very good, sir.
All right, buddy. Thanks a lot.
Bye-bye.
That was Arch Crawford of Crawford Perspectives. If you wanted to reach him, you just go to www.crawfordperspectives.com, and I'm sure that Arch would send out a sample of his newsletter that goes out every month. It goes in many, many foreign countries, and it's the granddaddy of astro work in the financial markets. He's been doing it for almost exactly the same amount of time that I have, because he's 3 months older than I am, and it's going to be an interesting time here over these next few months, and getting some of his information might be very interesting. He does have some really great psycho work, but just like me and everybody else, sometimes it works and sometimes it doesn't, but it's all probabilities based. That's all we're really watching. Now, I posted into Tiger TV the Bradley model that I look at, and as you can see, it topped within a day or two of where it was expected to top, and then we had the sell-off that lasted 8 days, and then we had the quick 2-day retracement that ended on Tuesday, I believe. And if we take out that low on the Dow, which is about 150 points away, we're going to be looking at something very, very sinister. We have a lot of support here at 1615 in the E-mini S&P futures, so that's held up incredibly well, at least so far today. But going below that sets up a challenge of the 1606 and then the 1592 level. And once you go below 1592 in the futures, S&P, you're looking at something very, very sinister. And that number in the Dow would be at 14,000, and let me get the exact number, 14,850. So it's 200 points away in the Dow Jones for, I would expect, what I would call a meltdown type scenario. Not necessarily a panic, but a meltdown type scenario. I believe that all the factors are in place for this to work. Whether it will work or not, remains to be seen. So that's a factor that we have to, keep in mind. For the bullish side, if you're looking at the bullish side of these markets, there are a couple of things that are still very bullish in my opinion. First of all, there's a statistic out there that's very, very positive, and that is that if you had an up January and an up February, it's almost impossible to have a down year. That's only happened 22 times over a period of 113 years. It only happened 22 times, and all 22 times the market closed higher at the end of the year than it did at the beginning. So we had a strong January, a strong February, and that tells us that we should be looking at something on the upside if you believe in statistics. But we'll know more as we get down towards the end of the year whether that's going to be a case or not. Now we have something I know it's related to the commodity markets, but this is one of my reasons for my bearishness in the stocks is the fact that copper has been in a bear market for 18 months. Well, we've been going straight up in stocks for 18 months. We've been going straight down in copper. And copper is one of the key ingredients in building because of copper wiring and copper pipe. It's key in the automotive business because of electronics. It's key in computers because of electronics. Anything that's related to electricity will have copper in it. And you would think if they're making all of these products and selling them, wouldn't the price of copper at least be back above where it was last September at $3.85, and we're trading 20% under that. And we're trading well over 65% lower than the high that it made above $4.60 a pound back in 2011. So we've been in a very, very bearish market, has tremendous divergence that I don't understand, but I do believe that it means something. That's the bottom line of what I'm seeing at this particular time. Now I want to switch over for a second, and because the time goes so fast when you're having fun. We have a interesting bullish move happening in gold today. We've had a pretty good rally, and I wanted to bring that up to you and show you the relationship between the gold and the silver so that you can see that these are moving in tandem again. And we had a major support hold in the gold today, and that made it very interesting. Very interesting move. Silver is still lagging very badly, but it did go down and make the 786 retracement.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we have a caller from Europe, I believe, England. Are you there, young lady? Rhea, is that you?
Yeah, hello, Hello,
what can I do for you, please?
Right, I have a question about USD and against the Japanese yen.
Yes.
I'm just wondering what sort of figure to get in.
Okay, now we have had a huge move in that. We were very bearish. Very bearish the yen and bullish the dollar. Back when it was trading around 75 and it got to that 103 level, and it has a correlation of better than 95% with the Nikkei Dow, and the Nikkei Dow. Several weeks ago, 3 weeks ago, as a matter of fact, hit the exact 786 at 16,000 and is now backed off almost to the 50% level at the 13,000. So we're coming into really major support in the Japanese yen dollar at around 93. We're trading at around 95 right now.
Yeah.
So about another 200 pips lower. I would be looking at that for a potential, to see, what the next leg is going to be. But
okay.
I couldn't buy it here because it still has some more to the downside, it appears.
All right. So you counted from 75 to 103. Why not 72 to 103?
Well, at 72 was the major bottom, but we didn't try to pick the bottom. And what happened was the market went into a 2-year trading range. And during that time, the leader of TFNN, who's Tom O'Brien, coined the phrase called King Dollar, and he basically became very bullish the dollar, primarily with the yen, and it made these higher bottoms around the 75 level, which made it very, very easy to enter because each of the bottoms was higher, so you were buying higher bottoms, and that's the real beauty of it. In fact, is if you go into the TFNN archives, you would be able to see some of those patterns and things that Tom O'Brien posted, and along with Steve Rhodes, and you'll see that that this was something that he was. I mean, it was. We started every day with King Dollar. I don't know if he still does it or not, but it still has a long way to go. I believe we had a high in the yen 30-some years ago at around 270, and we went down to 72. So we could easily go back into the 130, up into 130 to 140 in the yen, and still not even be making much of a retracement. So this is going to be a very volatile thing. This trading vehicle, the yen and dollar, is going to be very volatile for quite a while, in my opinion.
Okay, so you think the Japanese stock market will be down more?
Yes, I do believe. I still think that Nikkei has more to go. Rhea, we have to end the show now because our time is hung up, and thank you for joining us, and have a wonderful day.
Thank you very much. Thank you.
Okay, folks,
Bye.
thank you. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.